Good morning. So for the dollar, so here was yesterday's trading for the dollar. You can see we came up and we swept this high. So we took the buy side right there. And we created this daily fair value gap here. So I'm going to watch and see how we treat that. We also had this volume imbalance right here. If you notice, we came right up to consequent encroachment of that wick. So that's leading me to believe we're not going to see higher prices on the dollar today. There is a chance that this is the high. It doesn't mean the dollar's going lower. I would want to make sure it respects this daily fair value gap, specifically the consequent encroachment of it. It just means it might not happen today. So we might not get higher prices on the dollar today. I could see it being range bound between the consequent encroachment of this wick and this daily fair value gap. Ideally, it would be between the consequent encroachment of this daily fair value gap. And next week, we could see this higher buy side. But since I'm predicting that if this is the high of the day where we met this consequent encroachment and it is ranging between these two levels, then the indices are going to also range until we start making new highs again. I think that would happen next week. It's the end of the week. It's a Friday. So just understand that when we're watching the dollar on the lower time frames, this daily high is the consequent encroachment of this wick. So if we do go above that today, I think the indices could get heavy. We're pretty far off of it. If you notice on the 4 hour, it's the wick on the 4 hour that I'm measuring out. It's the consequent encroachment. Right now, we can see these candle bodies respecting this volume imbalance. But I can see us coming back down a little deeper into this daily fair value gap. So those are the levels I'm watching. Consequent encroachment, this 4 hour wick. Consequent encroachment of this daily fair value gap. And how we maneuver between them. Going to NASDAQ. Let me get that off. NASDAQ, we have met our weekly objective. And we are below it on the daily. So notice how we came down, closed below it. This candle, today's Friday candle, will be the candle that determines, does this week close inside of this fair value gap, or does it close below the fair value gap? So the bottom of this fair value gap is a significant level to understand. If we are above it, I wouldn't try and take any shorts to go short, if that makes sense. Because if we start to close above it, then that means the weekly candle is respecting it and we will not go below it. But if we are below it, then we can short for the continuation. We opened the day with another new day opening gap. And yesterday's new day opening gap gave a lot of good insight we could have traded it better, but I'm looking to use these two levels like very intentionally today. So you can see we gapped up. I think we end up taking this buy side because on the 15-minute, it's pretty smooth. So we'll see. Do we take the buy side, continue, maybe hit this new week opening gap and try and play it lower? Do we take the buy side and then show signs of reversal to this new week opening gap? That's what I'll be paying attention. I like the story ES paints better. If you look at ES, so we opened with the new day opening gap, and it came up, it came down into it, touched the bottom of it. If you look at the 1 minute, we'll see this on the 1 minute. It came down perfectly to the tick. I mean, that's beautiful. Love seeing that. It gets me excited because it just shows that how accurate these concepts can be. And the better you understand them, the more accurate you can be as a trader. Because look how accurate that is. It comes down to the tick. We reversed. Again, I think these highs are a little too smooth. We did take it here in London, but I think these highs are a little too smooth. So I think we're going to take those. And then I'd also be eyeing this buy side and possibly the bottom. I don't think the bottom of this new week opening or new day opening gap would be a crazy thing, but we'll see what the day looks like. The higher time frame. You can see this consequent encroachment of this wick. So the same thing that I said about the bottom of that new week opening gap for NASDAQ, use that as don't short if we're above it. The same thing for this consequent encroachment of this weekly wick for ES, because if we are above, if on the daily candle, on our day, we are above this consequent encroachment, remember that means that our weekly body wants to close and respect it. So it wouldn't be smart to try and take a short above it to try and go through it. It would be better to wait until we're through it and then go short below it. There could be a scenario where, say we are 10 handles above it, and I would short it as a target. But just in general rule of thumb, that's how I'm going to be treating that consequent encroachment of the weekly. You can see it does seem like our candle bodies do want to respect it today. We already bounced, came off of the new day opening gap. So because we came down into the new day opening gap, we delivered the sell side, we delivered the buy side, we came back up. I do think we want to see some more buy side prices into the open. And, if we don't, I feel like it would probably get pretty heavy and we would dig deeper into this larger weekly fair value gap, and that would be nice. We'll probably try and play some shorts if that's the case. But yeah, going into the 9:30, I want to be watching these levels of buy side. I want to see how we treat them. Does it treat it as liquidity to go lower, or do we show no sign of that and we continue on through them and revisit this new day opening gap? That's what I'll be looking for. You can see on the dollar, on the 1 minute, we came down, right, touched the bottom of it perfectly. Even right here at our 8:30 news, came down, touched the top of this fair value gap perfectly. Came back up. You can see on the 5-minute, if you draw out the consequent encroachment of this 5-minute wick, look, price came down perfectly to that 5-minute wick. So I do like how price is delivering today. In this pre-market morning, it is looking nice. Just give a little insight on the draw on liquidity. We're not super far from that buy side right here, but until we take it, that is my draw right now. So if at between 9:30 and in our trading times, if we haven't taken those already, I will most likely be targeting them unless we show a strong willingness to reverse. Probably mark out this too. Okay, so we got 3 levels of buy side. Yeah. This is kind of the inverse of what happened yesterday. So yesterday we gapped down, came back up. Here you can see we gapped down, came back up, touched the new day opening gap, entered into that volume imbalance, and then sent it lower. So today we gapped up, came down, filled in the new day opening gap. Now we're going for buy side. I would be interested, so I am interested to see how it takes this buy side, because if it like starts wicking above it and shows signs of a reversal, I think we could come back down through this new day opening gap. It already delivered sell side, and now we delivered buy side to it. It's not too far away, so I could see it. I could see us, if our daily candle wants to close inside of this higher time frame fair value gap, this orange area, then that's how it would probably deliver it. It would deliver it by sweeping these buy sides, then reversing and going. If our daily candle wants to close above the consequent encroachment of this weekly wick, which would also mean our weekly candle is closing above it, then I would say that this is the low for the day. So those are the 2 scenarios. I'm not gonna get too overzealous just because what I said about the dollar. I think the dollar today is going to kind of print a pretty tight candle. We'll see. The dollar's definitely not going for buy side though. So since the dollar isn't going up for that buy side, I don't think we'll continue lower. We won't see a day like the last 2 days. And I'm sorry for somebody in the live stream yesterday asked what my bias was for today, but they asked me yesterday, said, what's your bias for tomorrow? And then in the market recap, I gave a bias for tomorrow, and I ended up saying a down close day, but I completely changed that, I think. I mean, as long as we're above this new day opening gap, I think it's going to be a small up close day, as you can see right here. I think we might wick, but I think the candle is going to look something like this. I could be wrong. Okay, so I gave a quick market breakdown. We got 15 minutes until the market opens. I'm going to grab something to eat, and I will make sure I am back a few minutes before the market opens. So we will be sitting here in silence. I'm sorry, I can't be an entertainer and a trader. Is that how you spell beginning? Also not classically trained as an engineer, so beginning. There we go. Put that there in case anyone joins. Okay. Something, so I just checked the economic calendar. I knew we had an 8:30 news driver, but always check before the trading session starts. We also have a 10. We have high impact news, 10 revised consumer sentiment. So usually when that happens, I will wait until 10 explicitly before putting on a trade. See, yesterday, these lows were right at that daily wick consequent encroachment. The dollar is kind of looking like it's going to get pretty heavy. Yeah, so it's probably going to try and see this consequent encroachment. I think it'll be important going into next week where we close within this fair value gap range. It'll show how strong and how much it wants to respect the fair value gap. And then another thing too is if this is the high for the dollar on the day, then I do like the theory that this low is our low for the indice. And depending on how aggressively we go above these buy sides, I think that would show on our chances of whether we get into this new day opening gap. Because at least for ES, this gap is still mostly unfilled. So it might want to reprice to it. It's interesting though, when you look at the daily chart, I can see us wicking into here. So on the daily, I could see us wicking and then having pretty aggressive close. Also, when you look in the daily chart, that new day opening gap looks pretty far. Then if you look at the 15, it doesn't look too unreasonable. If we open and we don't take any of this buy side first, I will sit on my hands. Unless we get under this new day opening gap, I'd be pretty nervous to try and take shorts. Depends on what market structure looks like, because remember the narrative I told you a few moments ago about this weekly consequent encroachment. Since today's the last day of the week, we need to know that price is either going to either close above this or below this, and it's either going to respect it or it's not going to respect it. So like I said, I don't want to be trying to take shorts through it, but we are below it now. And then just always keep in mind the higher time frame context. Are we trying to close in this fair value gap? Or are we trying to close above this consequent encroachment of this weekly? What is this daily candle body doing? And that can be helpful. I use that to frame my draws on liquidity too. We do have a little bit of an SMT divergence, or we have a cracking correlation between, so ES, you can see it made this lower low. It's a pretty deep lower low. NASDAQ didn't. These are equal lows on NASDAQ. Something to note. Equal lows on NASDAQ. Lower low on ES. Okay, at the open, notice NASDAQ. Looks like NASDAQ's taking these highs, but ES isn't. So I'm gonna use that as a little bit of a red flag. The markets aren't performing similarly right now. Coming off, yesterday's loss, I do want to make sure we've been on a nice winning streak, and yesterday's loss, I don't want that to continue. Clearly, it's the end of the week. I've been saying this. I said this a lot in yesterday's videos. It's the end of the week. We've reached our weekly objective and our daily objective. Well, yes, not today. Yesterday, we reached our daily objective, but we've reached our weekly objective. So don't try and force anything. We don't have like a weekly draw. We don't have any big higher time frame areas that we can be confident it's trying to get to, especially where the dollar's at right now. I'm saying the dollar's just in between that range of that consequent encroachment of the wick and the daily consequent encroachment. So seeing this right now, and it's actually pretty bad. Look, the two candles on the open for NASDAQ were green. Two candles on the open for ES were not like that. So I would be cautious trading today. Remember, there's always next week. Next week, you're going to have brand new setups, brand new draws and liquidity, fresh stuff. But we'll continue watching. But this right here is something to note, that it is not signaling high probability trading conditions. And then you need to reflect on yourself and go, what is my ability as a trader? How experienced am I? Have I shown that I can, my analysis and the trader in me can persevere through this kind of stuff? And there is a difference between being good enough at reading price to still trade and just getting lucky. NASDAQ broke both of these highs. The dollar's dropping, so it looks like NASDAQ's listening to the dollar. ES is acting a fool over here. Interesting, very interesting. This has been one of the worst, most decoupled opens we've had in a while. I'm like double checking to make sure I'm looking at what I think I'm looking at. Yeah, so even on the 5 minute, so NASDAQ looks like it's going and sweeping the buy sides we highlighted, the London highs. ES is showing no interest to do that. Wonder if today's a good day to just go read NASDAQ. Very interesting. So on NASDAQ, we swept buy side. NASDAQ also, if you remember, hasn't visited its new day opening gap yet. So you can see NASDAQ here. We took even this 1 hour high. NASDAQ is looking really good. I wish ES was doing the same. And just because one looks good doesn't mean, oh, I'll just try that one, it'll be fine. They should be working in tandem. The dollar is looking very heavy. So then think about this. The way structure looks on NASDAQ right now, we sweep this hour and 15-minute high. We wicked above it. We have a fresh new day opening gap to the downside. It looks like this is looking like a decent short setup, but the dollar is dropping very aggressively. ES is looking pretty heavy. And the thing about the dollar too is, like I've said this before, it doesn't have to be perfectly inverse. It's not like every swing high has to be a swing low. You just have to kind of see the trend and look at higher time frame levels. That's why I won't go down to like start doing analysis on the 15 and 5 minute on the dollar. I mean, I'll look at them just to see the trend, but okay. So trying to think. This is looking like good for setups. But again, what I just said about this decoupling between ES and NASDAQ could be a very big red flag. I could see the dollar, if the dollar bottomed right here and it started to kind of retrace on itself, that would give the indices the allowance to drop lower. But that might not happen. I mean, you don't want to get too. This is why it's hard when the markets aren't in sync, because NASDAQ just took this liquidity. ES didn't take shit. One, had like a little 3 drives higher and then failed. And remember, we have the 10 o'clock news, so it might just kind of do this. Then what it could do is at 10, they wait for 10 to manually manipulate, and what it'll do is it'll just do this, and then boom, or the opposite way. And then even look at this. So NASDAQ took this higher time frame high liquidity. I'd want to see it take these lows next if I'm just looking at NASDAQ price and nothing else. But with this dollar looking so heavy, it's weird. The dollar keeps dropping and the indices aren't going higher, and they're actually looking kind of bearish. Like, look, well, ES is looking very bearish. So the ES is dropping just as heavy as the dollar's dropping. That's shouldn't be happening. Okay. And then also in times like this, it's good to just like turn your attention to the higher time frames and be patient. I know. I'll call it noise. ICT says, it's not noise, but what it is it's time distortion. That's the word he uses. So it's time distortion when I feel like you can see that it's more prevalent on the lower time frames when it is happening, because you're getting more data so you can see it, whereas on the higher time frames the picture might be a little more clear. NASDAQ looks like it now wants to turn over. I'm gonna go back to ES. ES has dipped back into that new day opening gap, touching this our higher time frame fair value gap. This is not a pretty market open. CES. So the PD array on NASDAQ swept that higher time frame high. ES, it looks like turned around right at this order block. You can see it coming up to consequent or mean threshold of the order block. See all the candle bodies. No candle bodies closed above the mean threshold. On the 1 minute, stopped on the 5, turned over. So I think the indices are signaling lower prices. It's just the fact that the dollar is dropping, so be cautious. There's nothing in here though so far that you should have taken a trade on, in my opinion. If like on this channel we're trading the 2022 model and the silver bullet, there is nothing of the sort in here. NASDAQ almost looked like it shaped up. Let's see. Almost looked like it cooked up a 2022 model. See, on a cleaner price action day, the dollar would be going up. NASDAQ would be taking these higher time frame highs, and then it would be displacing, making fair value gaps. It could still do it right now. It could create a fair value gap. It could enter. That'd be a 2022 model entry. Be a little scary with the dollar going lower. Yes is very heavy. Very heavy. Okay, so here's another Kraken correlation. So this is the difference between like an SMT is just like one swing high happens and it's usually signals like a sweep of liquidity. But if this is making higher highs, NASDAQ's making higher highs, ES is about to make a significant lower low. They're not in tandem. This is an example where I wouldn't call this SMT. This is a decoupling. And this is why what I'm seeing right now is why I keep these boxes, so when I'm watching NASDAQ, I can have ES open. And, you really only need it to see the highs and lows. So that's why if you're ever like, what the fuck are you looking at when you're looking at these scrunched up boxes. What I'm really looking at is just the swing highs and the swing lows. So I'm just doing it to see, did this go higher over here or did it go lower? Went lower. I come over to the 5-minute and I use it to go, okay, all I need to be able to see is this swing low. ES came below it. NASDAQ didn't. I use it to check to compare. See SMT, see decoupling. So now that ES just took this low, I wonder if it's gonna like kind of use that as like sweeping sell side to go higher, because NASDAQ's making a higher high right now. That's another thing too, is, you know, when this candle was printing right here and ES was dropping aggressively, you could have easily said, oh, well, I was saying it's looking like it kind of wants to roll over. And then it didn't. See, the dollar looks like it put in a swing low. I'm really curious as to how this daily candle is going to print, because these markets are pretty far apart. I'm going to look at ES. Okay, so these are very nice equal. I thought it might have swept it, but it came down and just touched the bottom of this new day opening gap again. Came up. You can see it respected this up close candle. It looks like ES is in like a sell program, whereas NASDAQ's in a buy program. And it's also interesting because that wasn't like the dollar and this yellow line. The dollar kind of made this significant swing low right here, but ES was, before this, ES was dropping with the dollar. Shouldn't happen. That's XRP. NASDAQ couldn't close a candle above these highs. It's probably just time distortion until 10. Remember, high impact news at 10. So on the dollar, we came down. Looked into the bottom portion of this fair value gap. I think I said earlier in the live stream, where this is a 4-hour, but where this daily candle on the dollar closes in respect to this daily fair value gap, I think will be significant in how next week looks, because I think if it really respects this daily fair value gap, that means next week it will want to continue taking buy side. And if that happens, we will see cleaner price action in the indices. If it closes in the bottom portion of this daily fair value gap, I think it could just trend sideways again. And that will produce some rough trading conditions. ICT himself said on the weekly, and he said this and then took a trade yesterday at the beginning a long time ago, he was like, he wanted to see a daily candle close in the upper quarter of this wick. He said when a daily candle closes in the upper quarter of this wick, this buy side will be taken afterwards. And he said he was going to not trade until then, but then he took a trade. But anyways, just breaking it down to a smaller time frame analysis, it's important to pay attention to how we're respecting this daily fair value gap. Because this could be the low of the day on the dollar. Right here, this significant low. No, I liked watching NASDAQ better. Okay, well, there we go. NASDAQ's rolling over. It really just wanted to wait for the dollar to put that low in, it looks like. So I wonder if the dollar is going to start making higher highs right now. That's allowing NASDAQ to drop. You could have a fair value gap right here. That could be a 2022 model. I'm not going to take that just because of how ugly the market opened, and we have high impact news at 10. CES candle bodies respected that fair value gap that just made. That was I was explaining the difference on why I don't trade NASDAQ, and it's because I've trained my eye this past year. I've been watching just ES for so long that sometimes like a pullback on NASDAQ, I'm looking at the candles print. I'm so used to ES. I'm like, oh yeah, it'll respect that. And then I'm just not used to kind of how NASDAQ ebbs and flows. I'm sure if I spent some time just watching it, I could get it because the principles are the same. But so for a 2022 model entry, you could have had your stop here, but I still wouldn't be that confident because look, we came up, closed above this, came back down. And this candle, I don't like the way that candle reacted off of it. It almost looks like it wants to use it as an inversion. And now look at ES. It looks like we respect that fair value gap nicely. We're below the new day opening gap on ES. We haven't even touched it on NASDAQ. This has been a long, this market open has been long. It just hasn't even, it's been really faking us out. Okay, so again, high impact news at 10. I will not be taking a trade. I will wait for better, higher probability conditions. And we will get those eventually. Yeah, so if you did enter at the bottom of this and you put your stop up here, you'd still be in it. I wouldn't be comfortable about it though. And you would have got, would you have gotten 10 handles? You would have got 10 handles. So you would have hit your minimum objective. Another thing too is I'm so used to ES that there was like 1 or 2 days where I tried to trade NASDAQ and I was like measuring out the ticks, and I would like measure something out and I was like 50 ticks, and it was really just double. Because on ES that's a lot. Again, so just see how far ES is from its high and how close NASDAQ is to it. These are not high probability trading conditions if you want to trade smart money concepts. And you don't need to be trading every day. Because there are days where it'll be just so blatantly obvious. And it's like, oh, that was so easy. And it's just like, okay, so if the key for me was really just like on days like this, don't trade. And then when the days comes where it's just really easy, it's like, oh wow, I never took a loss. I only waited for the easy days when it was easy to take a win. Account balance up. And even if you did enter on this and get 10 handles, that was kind of lucky, because look, it just stopped right there and turned around. Like that's not a trade that I'd go and brag about to other traders. You basically got lucky that it actually just fluctuated 10 handles below your entry before turning around on you. Yeah, so it looks like the dollar put in pretty significant highs and lows. Remember, the high of the day right now is at the consequent encroachment of that 4-hour wick. And then the low is pretty deep into that fair value gap. Now it seems like it's coming up above it. NASDAQ sideways. ES has been moving down, but it's not the prettiest. I think NASDAQ still goes down just because we haven't been able to close a candle body above these highs. So I think what these were just liquidity. Some liquidity. And with the dollar kind of putting in some higher highs now, I think NASDAQ will roll over a little bit. But again, this will be that difference between the trader and the analyst. So I can predict that NASDAQ comes down and hits the top of this new day opening gap. But how is it going to deliver that price? And will it deliver price in a clear and obvious way where you'll know where the entry is, you'll know where to place your stop, and you'll be confident in doing so? Because look at this. Like, this by all means, I think could have, somebody could have entered on this. You know, it was a market structure shift on the 5-minute after taking buy side liquidity on the 5, 15, and hourly. They could have put their stop right above this high that made the fair value gap, and they would have got stopped out. Where is ES right now? Because that thing is dropping. It's below its new day opening gap. It's back into this weekly fair value gap. Ooh, this is what I want to look at on NASDAQ. So NASDAQ, yeah, so remember what I was saying on the weekly or on the daily. NASDAQ closed below its weekly fair value gap and has come up and touching the bottom of it. So this was all us just touching the bottom of that weekly fair value gap, kind of using it as an inversion on the daily. So yeah, I think especially since, yeah, lower prices, I'm seeing lower prices. We took this hourly liquidity. Lower prices if the dollar continues to make higher highs, because if the dollar starts to drop, those lower prices will not be in play. But just looking at ES, if you took any fair value or any PD array short up until like the low it just made, you could have, you know, been successful. Got a fair value gap here we entered in on. Came up, order block right here on ES. I wonder if NASDAQ, I wonder if it's going to wick above this high. If it comes, wicks above this high, but then the candle body doesn't close above it, I think that'll be a 3 drives pattern, and then that'll allow it to really drop. That's assuming, again, that it wicks above this high. So always frame things in a, if it does this, then I'll do this. If it wicks above this high and can't close and then breaks market structure, I will I'm not going to do this, but I'm giving an example. I will enter on the retracement to a PD array with, the contingent that the dollar is doing this and blah, blah, blah. I think if the dollar comes and starts really closing below this low, though. See, this is why it's so hard, is like when these markets are decoupled like this. Like, look at ES. So far off its highs. And remember, the more today is a good example of how the more trades you take, the more you open yourself up to risk, because this fair value gap met a lot of the criteria to be a 2022 model. And look at it now. Whereas this fair value gap right here, there could be somebody who entered on that and they just, happen chance to take that one instead of this one. And then they got 25 handles and it was like, oh, nice. So like this one worked, but this one didn't. Yeah, so it's like probability. Like the more you take, the more chances there are, especially if you're trading in a market like this. And then it's like, okay, well, you're going to go short this now because the dollar's dropping. It looks like it kind of wants to take this low. I'm wondering if okay, so remember what I said, if it came up and wicked above this high and we didn't get a candle body close, we didn't get a candle body on the 5 minute, look at it right here. It's not closing above these highs. And then we retrace aggressively, shift in market structure. You could enter short, but the dollar's dropping, so it's like the dollar is opposing that idea, and if you're following the concepts, we shouldn't be trading against the dollar. Just know that I don't think, in my personal opinion, if anybody traded this, they probably got lucky. Because this looks like some seek and destroy shit. ES did. I wouldn't say ES was fully in seek and destroy, but because you could have, it respected some PD arrays on the way down, so you can see broke lower order block. This is just a blatant order block. Change of state delivery lower. Came back up, tapped into mean threshold. Candle bodies couldn't even close in it. Came lower into this fair value gap right here. Came lower. Came up, down, higher. Now it looks like they are respecting this to the upside, but I don't want to try and take an upside trade. I think in a cleaner market day, it would have swept this buy side before doing this. And then, yeah, look, on the 1 minute, this, actually the 5 minute might show it better. This swing low right here on the ES 5 minute is like a pretty significant low. But at the same time is a pretty significant high on NASDAQ. Yeah, ES looked a little more tradable than NASDAQ did. But ES, yeah. So I guess this was the silver bullet. That's fun. I think it would have been pretty risky to try and trade that. But it delivered 5 handles in the hour of 10. I don't think re-entering on that would have been bad. Just because I'd put my stop right here. I don't think it should come and take this low. I don't like mapping out breakers in the 1 minute. I've never really found success with it. I usually go stick to 5 minute or higher. But with this structure, we had the downtrend, came up, down, up. So just the way this order flow delivers, it should continue higher. If it doesn't, then I'd say it would just be proof to the fact that today is not really a tradable day. And that is just reading the 1 minute, but if you look at the higher time frame, like the 5 and the 15, you can't argue that this is a retracement to go lower because the dollar is putting in lows. So if the dollar is making lower lows, you shouldn't be trying to trade ES to the downside. You can see on the 5 minute, this 5 minute wick, the next candle came down to the consequent encroachment of it really nicely right here. Yeah, like I said, Never really found success with 1 minute breakers. I definitely will not stay on for this whole 10 o'clock hour. I was just kind of staying on to give you guys, just to read price for you. I don't think, especially in NASDAQ, I don't think anything on NASDAQ was really tradable. Look at that. I think ES, it was too risky to even take a trade. Yeah, the markets were they were pretty decoupled. At the open, ES was dropping with the dollar. Shouldn't do that. So remember, we just don't trade decoupled markets. They should be, NASDAQ and ES should be making the same higher highs and the same lower lows. And it should be going counter to the dollar. And that is what gives us high probability trading conditions. Look at this. Like, what? If you tried to enter this on the retest, where would you have put your stop? Like, right there? Probably would have got stopped out. I mean, you could have put it there, but just reading this, it's not doing what it should. We should not come up and make these higher highs and then reverse, take out lows, and then come back again. So that's the argument why you shouldn't be trading this 1 minute. This 5 minute, it's moving with the dollar. And again, you should always be just framing where's the draw on liquidity. You can get caught up. See, I think what really does people dirty in market conditions like this is people, and I mean, I can be guilty of this too. People start framing out and looking at all the PD arrays and like trying to figure out like, oh, it's turning around in this 5 minute fair value gap, and it stopped at this point and turned at this point, because they're trying to make sense of nonsense. And even like our mentor himself, sometimes he'll say he's not going to take a trade, and then he does take a trade, but he's made 2 tweets today, and he's just like, go outside, put the phone down. He did just tweet, note the 14, he said, note the sell side on NASDAQ. So I'll go try and see what he's seeing. He said, note the 14,295 sell side. Study, not trade it here on the 15 second. Okay, I don't have 15-second charts. I just haven't got them because I don't think I need them for our models. You don't need I saw this tweet that I really liked. It was like, you don't need something else. You need to just like stay doing what you need to do. You don't need another model. You don't need another strategy. You just need to commit and get better at what you have. So under that ideology is why I never really got anything lower than the 1 minute chart, because I just said I could master the 1 minute a lot better. No need to bring in anything lower. Let me just sharpen my skills with what I have. Yeah, so he said study note this sell side on NASDAQ. Study, not traded here. 15 second. We don't have a 15 second, but I'll watch it. See if we can make any sense of it on the 1 minute. What I think, what I'm wondering if he's seeing is a market maker sell model on the 15 second. So this would be the original accumulation in the market maker sell model. And then this would be the smart money reversal point. This could be the first distribution, the retracement, and then the redistribution, second stage redistribution. And what that would do is it would take out these lows with the ultimate target being these for the original accumulation. It's just my guess. If we had the 15 second chart, we could probably map that out, but you know what I might do today? I might go back and rewatch in the 2022 playlist, the video where he breaks down intermediate highs and like short-term highs. I feel like that one, I remember I watched it twice, but that was one of those videos where if you just go back, no matter how many times you watch it, you'll see something new. And if you watch it, if you like gain some more experience and then rewatch it again, you'll see something again. You'll see something new. I say that because I'm noting when he tweeted this. It was right after this high was put in place. So right here we have an intermediate term high because it has a swing, a short-term swing to the left and to the right of it here. And then we take it again and make a new intermediate term high here because it has a short-term high and a short-term swing high to the next of it. So this is a new intermediate term high after taking. So I want to go back and watch that video because I'm noting how when he tweeted this and what structure was doing at the time. It's right after we put in a new intermediate term high after taking a previous intermediate term high. I'm guessing on the 15-minute this is, or at the 15-second, this is probably a really big market maker sell model. So in theory, what I'm guessing is we shouldn't come up and go any higher than this high before we take sell side. And this is the way that I look at price. Like I said, don't try too hard to make sense of nonsense. But when you are seeing consolidation like this, I'm not really, what my eye is gravitating to is the swings. The swing high here, swing high here, swing high here, swing high here. And noting kind of the order they're in. And I'll go back, I'm going to have to go back and watch that video so I can communicate this a lot better. But the order in which a buy side's intermediate swing high might be taken compared to a sell side. And then, so I think this is actually a long-term swing high, and a long-term is one with two intermediate terms next to it. This was right here, our long-term, our previous long-term. Well, it still is, but it's not the highest one now. This was a long-term high. So again, intermediate term high has a short-term high and a short-term high next to it. A long-term high has an intermediate term and an intermediate term next to it. This is intermediate term because it has a short term and a short term. Short term, intermediate, 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 long. So I'm predicting that price will not, it will take this level, but it will not reverse past these highs before taking this level. Now we could come and take this level and turn around, but right now our if-then statements are, you know, if this does that, if this does that, then I'll do this down to here. I'll stay on just to watch this play out. I want to see if my analysis on that was correct. Do we come up and take these highs prior to taking this low? I saw another. I only use Twitter just to follow ICT's tweets, but I followed just a few other people that I thought did good analysis and smart money concepts. And I think the guy with the Twitter handle ICT Concepts is, you know, I think he kind of hosts like a little community. But he also just tweeted something that was basically saying, if you seek and get destroyed in this, because it is seek and destroy. So there's a little bit of validation on our part. sell side. I appreciate you guys if you're still here with me. Just watching price. This is trading. Trading is monotonous. It is boring. So I'm noticing how this was that swing high. These were the two swings that I wanted to study as places where a stop loss, or like it wouldn't, I don't want to say stop loss, it wouldn't make sense for price to go back and above. Look at that. Went just a tick over the consequent encroachment of that wick, and that's when it decided to turn over. I'm curious if we now send it to that south side. Yeah. He said study, not trade it. Remember. You know, in hindsight, you can still get that FOMO. It's, oh, that would have been a good place to enter. But I talked in the video yesterday about when you burn yourself enough times, you learn. I'll keep that up. Oh, is it perfectly to the tick? Did I have it placed wrong? Oh, looks like it's just over. Again, so long-term swing high, intermediate term high, because they have short term and short term next to them. When this high took this high, it became a long-term high, or because, so this was our long-term high over here, way on the 5-minute, and then these two took it. And then remember, this is a rolling thing, so we took it here, we took it here, so then this becomes a child, like in the terms of like hierarchy structure, like this is the parent now, these are the childs. It's still working its way out, but then you can see it form here because now we have the intermediate, so it's an intermediate term because we have the two short terms. And then this one finally takes it. This becomes child, this becomes parent in this structure. And now you can see it play out. We've now made the new long-term high. These are intermediate terms. And then price. And all this, while this has happened, no sell side's been really taken in terms of liquidity. The context, we're at the bottom of a pretty significant level on NASDAQ. This is a weekly fair value gap that yesterday's daily candle closed below, and today's candle came up and is touching the bottom of it, treating it like an inversion. You see this market structure at the bottom of it. Meanwhile, we did get this one candle body close above this, but you can see it sharply reject it afterwards. Here's where ICT called out. I believe, I would love to see him if he did a breakdown. I believe he specifically called it out here because it was right after this high was placed. Boom. So that's what I was saying earlier about, trying to sharpen my skills on the 1 minute, because and he says this too. He's like, you can absolutely read down to the 15-second candle on everything price is doing, because according to him, it's very algorithmic. So this is probably one of those. He called out the 15 seconds. So this is one of those examples where he's reading algorithmic price action on the 15-second, and we're watching it on the 1 minute place structure like this. So if you think of it in relation to, so he's looking at the 15-second, we're reading the 1 minute. That's almost like when you read the 1 minute chart in terms of, and you're reading the 15-minute chart. I know the ratios aren't perfect, but I'm going to think about it. Like, that's how I'm going to view it. But the point is still correctly. It's, smaller time frame fractals fit into higher time frame fractals. So you can read price on the 15-minute and use that as predicting the daily. And you can work your way down. But also notice how, actually, I don't agree with what I just said. I'm not going to say it. What's the dollar doing while all this was happening? It's going higher. But again, so I do think even the fact that he was reading the 15-second is a testament to how sloppy this 1 minute price was. He had to go down to the 15-second to start reading stuff, because it was like, on the 1 minute it was too irrational. So you had to drop down to get more precise, so you can predict smaller runs. So that's why, I don't think it would be smart to try and, because it looks like the next sell side is this new day opening gap high, but I wouldn't even try and target that, because, think about it. If we targeted this low on a 15-second narrative while we're looking at the 1 minute, in the 15-second, this is a run. This is a big run on the 15-second. And if price is going to continue to print like that, where it's irrational on the 5 minute, irrational on the 1 minute, kind of, I was able to, kind of explain to you guys what was happening here. But in relation to this move on this analysis was kind of based off the 15-second and the 1 minute. This is a large move, so I wouldn't expect too much of continuation. We could very well get it, but again, if we just did for example, a 15-second analysis, don't be like, oh well, now in the 15-minute it's gonna run. It's too big of a jump in time frames, whereas you're like, you can do the 1 minute to the 5 minute to the 15-minute because those are all close enough where the narrative and market structure, they're kind of telling similar stories. But if you try and compare the 15-second to the 15-minute, there could be 100 stories in that 15-second that all are actually part of just one story on the 15-minute. They're too far apart. There's too many fractals. If we were to continue lower, I wouldn't want to see it get above that. That motherfucker took a trade on the 15-second. Yeah, so he entered. It looks like he entered right where that consequent encroachment level we had measured out was. Yeah. I think so. It's kind of hard to read from the picture he posted, but he entered at 14,345. 14,345. So that is in between, right here. Yeah, so just goes to show what I just said. I wouldn't think it would have been safe to try and short down to that new day opening gap. Anyways, okay, so, oh, now I'm seeing the comments. Hey, appreciate it, guys. Again, if you're still here, Aldolfo and Column, I don't want this channel to be too much of learning. I mean, I kind of guess I do reiterate and teach the concepts just because I explain the trading. But I do think that if you want to learn to the fullest extent and most accurately, you should go and watch the videos from the guy who made the concepts, because there could be times where I'm wrong. Like everything I just said, I like to think that I had a pretty good understanding of what just happened, but I would hate to lead you astray. But if you are enjoying it, I hate saying this. It sounds really corny. If you could like the video, because I do notice, like when I look back on the videos, the way I do see how the algorithm pushes it differently depending on how many people like it. And I thought this was a good one. If you also thought it was a good one, I would appreciate that. Okay, but I'm gonna get off because I think we saw this play out. I don't want to wait. I'm definitely not trading. Let me see what ES did. You can tell I like doing this. It's hard to peel me away. Damn, maybe I will start on days when I'm like I know I'm probably not gonna take a trade. I'll start tape reading NASDAQ, because NASDAQ is it just delivers price so much cleaner, and it like builds a better narrative. Whereas I think that, I mean, I only saw that, to be fair. I only was able to pick up on that whole breakdown I just gave you because he tweeted that sell side level. And I was trying to figure out, like, what the fuck is he seeing? So I will say that, but I don't even think I could have read that on ES. It would have been the long-term high. Yeah, it's that narrative fits a lot better on NASDAQ, because what I said, we're above. We just put in a new long-term high on the 5-minute. Took a significant high in the 5, the 15. We're coming up on the bottom of this significant level, this weekly fair value gap. So with this price structure at this location and at this time, that feeds a lot better to expecting sell side delivery than what I think ES showed. I mean, it delivered on ES, but if you can see on NASDAQ, it came back right up to the consequent encroachment of this intermediate term high. Whereas on ES, it didn't come up to consequent encroachment. It stopped at 25%. And I think it stopped at a level that was valid. It's one of those things where, it just because it goes past 50% doesn't mean the narrative is invalid. I think if it went higher, like if we wicked above it, then I would have been like, I think that would have invalidated the narrative, but it didn't wick above it. So that's like this like hard gray area where, you need to get accustomed to knowing what is allowable and what isn't allowable. So, and then what's ideal and what's not ideal. So closing above 50%, it's allowable. It's not ideal, but it's allowable. But having NASDAQ go to 50% to the tick, that's ideal. And NASDAQ seems to be printing price a lot like that. I mean, ES has been good, I think, most of October. I've had a pretty good October in reading price. But on their NASDAQ just always seems to be a little more accurate. But yeah, the narrative did play out on ES. It just wasn't as obvious because it wasn't like we were doing it at a high on the 5 minute. So long-term high, intermediate. This is intermediate because it has a short term and a short term. Intermediate. So we took, no, this isn't intermediate. Yeah, see, it's a little harder. So this 15-second market maker sell model seemed to have began, and this is all in the context of the 15-second chart, right around here. Because I say that because we were making lower highs and lower lows, so we're in this downtrend. And it was this run that broke that downtrend by making a higher high. So I'm guessing this was kind of like the original accumulation on the 15-second. And then we came up, and then this is the market maker sell model, which delivered below the original accumulation. So I didn't even want to consider this swing high in that analysis. But yes, I have the long term, intermediate, coming up. Wonder. So okay, it repriced to the intermediate term. So that's another reason why I'm gonna want to go back and watch that video for a third time, because that's one of those things that you could easily skip over, and like he might not even explicitly say it, but you can see him do it. Since this isn't an intermediate term high, when we see this when we're expecting a retracement, should we only measure out should we measure out the intermediate term one over this one in terms of wicks? Because this wick's bigger and it's closer. So that's why I initially gravitated towards this wick. But this is an intermediate term. This is an intermediate high, whereas this is not an intermediate term high. This is not an intermediate term high because it has a swing high to the left of it. So I'm guessing price algorithmically came up and respected this wick instead of this wick because of that hierarchy. This is the intermediate, and this is not. On the 1 minute or the 5 minute, you could call this kind of got like a breaker structure happening. It's even here on the 15 minute, but we'd have to come all the way back up here for me to want to trade that, which I don't know if we will. Okay, now I'm going to get off. I will not be on in the afternoon. I'm excited to get maybe take a break from trading over the weekend. And then we'll get back to it on Monday. I'm hoping, fingers crossed, going back to the dollar. We'll take a look at the dollar. Because earlier in the video I was explaining how I think the dollar, where the dollar closes today, will be tipping its hat to price action next week. So I would like to see the dollar close above consequent encroachment of this daily fair value gap. I think if it doesn't and it closes in the bottom half, that shows that this fair value gap, for lack of a better term, is weak, and we could just kind of range. We could stay in it longer. We could wick down into this, but I would prefer to see signs that it looks like this is a strong fair value gap in the sense that it wants to leave it. So a sign that would indicate that it is in a hurry to leave it is where this candle body closes. This candle body closes in, say, the top 25%, then we could expect it to leave sooner within the next few candles. We want it to leave this fair value gap because we want it to continue taking buy side. So it did take buy side right here and then reversed. I think if we start to close in the bottom portions of this fair value gap after taking this high, that wouldn't be too good. But enjoy your weekend. We'll see what the dollar wants to do next week. Hopefully it's good for trading. And bye-bye. Bye-bye, God.